Hi, I'm Pattu from freefincal. In the previous video, I talked about the employee contributions about 2.5 lakhs being taxed as per slab. In this video, because of the questions that came because of that video and also from elsewhere, I want to give you an example of how this actually works. So let's say your EPF balance as on the 31st March 2020 is 10 lakhs. The employer contribution is let's say 20,000 a month. The employee contribution is say 20,000 a month. That is a 2,40,000 a year. That is a financial year. Now, if this is the situation and you are not investing any more than this into EPF, nothing need be done. There is no change for you. But suppose if you decide to invest via VPF, 5,000 rupees a month in addition, then your total contribution will be 5,000 into 12 plus 2,40,000. So 60,000 plus 2,40,000 will be 3 lakhs. Now, if the EPF interest for that year is say 8%, then the 8% interest on the excess amount about 2,50,000, that is 3 lakhs, which is your total contribution, minus 2,50,000 is 50,000 rupees, and 8% of that 50,000 rupees is 4,000 rupees. This 4,000 you should show in your ITR return as income, and you have to pay tax as per slab on this 4,000 rupees. That's essentially how it works. Further compounding of this interest in future years will not be taxed. There's no need to get confused about this. The EPF balance of 10 lakhs, that's irrelevant. It doesn't come into the picture. Don't get confused. It is just like a fixed deposit. The any excess amount above 2.5 lakhs, the interest on that excess amount will get taxed just like a fixed deposit. You have to show the interest every year in your ITR and pay tax as per slab. So that's essentially how it works. Please don't get confused. Bye-bye.